This one dividend investing strategy tweak made all the difference for me, and since implementing it, well, my ROI in terms of just overall total return has been unbelievable, literally off the charts. And now I want you to implement the very same strategy, that is, if you're really looking to drive returns this year. But before I get there, I do want you to know that I officially classified myself as a dividend investor for a handful of years, and really without any regret, even though that did come at the detriment of a lot of heat from the masses of investors who are out there who really just were sharing with me that I was either wasting my time or just have zero business focusing on dividend stocks with so much time left on my horizon before I was actually retired. Now, the reality is such arguments really do have some validity. I'm not here to shrug them off entirely, but the key is that each and every one of us as investors has to discover the investment strategy that pairs well with our ability to sit for decades without flinching or making any emotional investment decisions when it comes to actually building wealth. But the key tweak that I made came down to what I was focusing on according to my investor profile, something I frequently talk about here on the channel, which all comes down to your age, your investment timeline, and your risk tolerance. Now, the big focus over the years has really shifted from the excitement of higher dividend yielding stocks to arguably the most important metric as a dividend investor, which is the dividend's growth rate. This often is just overlooked because, as well, you can do the math, a lower dividend yield means less dividend income right now. But Einstein, Einstein. The question I want to pose to you right now is whether you're actually in need of that dividend income at this moment. Because if not, then focusing on dividend yield for income right now actually means walking away from boatloads. And I'm talking about boatloads worth of return on investment. And I don't know about you, but this is the game of investing. It's not about getting rich by Tuesday. It's all about building true everlasting wealth. And it's important for you then to really understand that you're going to have to sacrifice some dividend yield now, and that really will pay off if you have time on your side, because the lower the dividend yield and the higher the growth rate means you ultimately make more over time and with less overall stress of any dividend cuts. And because I'm a man of my word, I personally did a complete 180 on my strategy to capitalize on dividend growth. And I'm attesting right here, right now, to this very fact that you make a ton more money in terms of the overall total return. Let's just have a look here now at pulling up a quick comparison between a dividend investor's favored stock, Realty Income, which shells out a heck of a dividend yield that's undisputable, over 5% these days, where we're going to see that not only has the stock been trading sideways, which again, not bad for some in need of dividend income and stability right now, but when plugging in, say, Waste Management, a dividend grower, we're going to see that instead of a net depreciation on that share price over the last 5-year period, investing into Waste Management would actually have allowed you to net appreciate by over 75%. Now, some of you may be questioning, really, what does that mean in terms of nickels and dimes? Well, clicking into a total return calculator, we're going to find that Realty Income would have resulted in about a 14.8% gain if you invested $10,000 and left it there for a handful of years. But what about a dividend grower like Waste Management? Here we are with what we would come up with, a 90+% gain with the same time frame and investment principle, ultimately meaning the difference between about a $1,480 return to an over $9,000 return. I want you to just for a moment ask yourself that question once again. Is the dividend yield now really worth your future wealth? Or could you just be robbing your future self of the rags to riches dividend story? With that, you may be thinking, well then, what really qualifies as a good dividend growth stock and where should I be looking? So I now want to run through just a couple of dividend growers that I personally like, and not only I'm recommending here for everybody, but I'm actually invested in as we speak, with the first being a company that we all actually use almost daily, if not literally every day. We have Visa, ticker symbol V, which is the largest of its kind in terms of being a transaction facilitator in the world, powering over 4.3 billion cards globally. Now, the real magic of Visa lies in the fact that the company generates revenue from each swipe of your credit card as they charge the merchants a dime or two on every single purchase. But think about the amount of purchases that are then being made by all of us every single second, and voila, we get an indestructible dividend dividend investment. Now, pulling up Visa's stock chart, you're going to see here that the stock soared along with the S&P 500 this past year by just about 22% worth of appreciation, currently trading for $334 per share. And clicking to the 5-year chart, we're going to see almost 70% worth of appreciation, but scrolling down, we're going to get to this income statement to see that we get revenue flows kicking in and kicking up, which is what I love to see. And then we have a balance sheet here that also reads very healthy to go along with it, with assets up overall, totaling out to about $94 billion in assets to just $55 billion in liabilities. Now, clicking right into Simply Safe Dividends, we're going to see a solid safety score here coming in at a 99. We're going to scroll down to get a payout ratio here that reads 21%, a 16-year dividend streak. But ultimately here we are with an all-powerful 18% dividend growth rate. Now, investors, before I cover my personal go-to dividend growth stock right now for 2025, join me here on this financial freedom journey by subscribing to the channel to build our wealth together. And most importantly, if you're actually getting value from this very video, or you've taken some value in the slightest of tidbits of knowledge away from this video, tap on that thumbs up button just to let me know, so I'll keep pumping more videos out just like this. With that, we're going to go ahead and get back to it here with United Health, ticker symbol UNH, which of course is the largest healthcare provider within the United States, and even has Optum Health, which is their primary care segment, generating a ton of revenue for the company as well. But as I am sure you all know by this point in time, recent events of the murder of Brian Thompson put United Health in the spotlight, as well as really the entire industry. And for that matter, well, we have opportunities out there. However, with Trump in office right now, what we need to understand is that he's a friend of big business. And more than that, the United States, irregardless of the sitting president, is unlikely to really make sweeping changes to the healthcare industry or the healthcare system as a whole. So I'm long-term on United Health and am looking all over this sector. Clicking into the stock chart for United Health, we're going to see that the stock certainly took a hit through all the saga from the media headlines, up only about 7% on the year here. But as a long-term investor, this is what we have to understand. United Health performed up to par by almost 100% in terms of appreciation. Now, scrolling down, we're going to see another gem that continues to generate revenue as its industry is bulletproof in the first place, revenue up here by about 7%. And on the balance sheet, well, an uber clean balance sheet with almost $300 billion in assets to just $195 billion in liabilities. Now, as for Simply Safe Dividends, they're going to rate the stock safe, coming in at another safety score here of a 99, a bit higher of a dividend yield here with a 1.55% dividend yield. We're going to scroll down to get another low payout ratio at 29%, a 32-year dividend streak. But check this out, an ultra-high dividend growth rate averaging 37%. Now, investors, those are my 2 dividend growth stocks within my portfolio. I want to know yours, so go ahead and comment down below, or just let me know what you think about this whole dividend investing strategy tweak, and if you're about to implement it. Be sure to tune in right here to actually learn from a true dividend millionaire. Subscribe, and of course, I will then catch you all in the next one.